Gondor for a while. I think you were one of the first protocols that I kind of learned about, and the protocol is really interesting. First of all, it's a DeFi native protocol, so it's like actually one of the first protocols I've seen that has been like integrating with Polymarket on the chain level, which is really cool. So I'm glad that you took the interview. I'm glad that you got back to me, and yeah, maybe we could just kind of kick it off with a little bit about you, what you're building, and kind of go from there.
Of course, of course. Thanks so much for inviting. And yeah, I've also been seeing Polyfactual here and there. I think you guys have shipped quite a few products for the past year, so congrats on that. And yeah, as for myself, I've been into prediction markets for the past few years. I've started in 2023 when I moved to San Francisco, and I quickly got to know those guys in Berkeley who were trading on Manifold back in the day. That's like a play money prediction market in the United States. I started doing the same, placed a few bets. Also, it was permissionless market creation, so I had a few markets on myself and say whether I'm going to go on a date in the next month or something like that. Just spun up by my friends. That was quite fun. And yeah, I liked it a lot. I also got to know about Poly Market around the same time. Started placing bets here and there, mostly directional, and also did some strategies on bonding, as it's called now, right? Just buying shares, which are very likely to resolve in a specific outcome, basically collecting yield. Right. I think back then it was even less efficient than it is now. And I was trying to optimize for shares which are like expiring in a few days, but then have like 99% probability of success, something like that. And yeah, I was doing those things for quite some time and then started looking around like within the ecosystem. So I saw Limitless, Myriad, True Labs, oh sorry, True Markets, all of those guys. And yeah, I've started just researching whether I can get more edge for myself. And I found out that Poly Market shares are tokenized, just read through their documentation. I was like, okay, that's super interesting. They're actually your C1155 tokens stored on Polygon, and you can take them out of Poly Market. You can store them in a cold wallet. That's what most people did. But then you can also trade them in any third-party app. And yeah, that's how I started brainstorming around this idea of like a layer on top of prediction markets. And then I think capital efficiency makes a lot of sense. First off, because I was bonding myself, and I know a lot of people who are bonding too. I think those bond yields are still quite high and unoptimized. So if you could like essentially lever up your bonds or like loop your bonds, that would be similar to yield farming in crypto in general. And then I think, yeah, overall prediction market needs better capital efficiency. It's kind of obvious once this ecosystem starts growing larger. You want different tools like leverage. You want people to be able to, yeah, like max out on your capital, especially with like you might have seen those challenges, like maybe from $10 to a mil, right? With stuff like Gondor, it would be much easier to do because you now have more capital under management, essentially, right? Yeah, so lots of intersections, and that's how we've started it all, and then it's been a pretty interesting journey so far.
Yeah, I think it's so your point about like earning yield while you're holding these position makes so much sense, especially for prediction markets, because a lot of times, yeah, like when I first got into prediction markets, I was expecting, I was kind of deluding myself into believing that there were these tons of like, 10x, 50x opportunities. But the reality is that some of the best strategies, really the best consistent strategy is the bonds that you're talking about, basically. And like I feel like a service like Gondor does provide a lot of stuff there, just so that you can kind of earn passively, so that you can take these positions and earn more money. The I don't think a lot of people know that you can basically take the tokens from Polymarket and they go into your wallet. My question is this true when so is that also true for when you're using the Polymarket app as a user, or would you have to connect like a wallet, to like a bot or something directly to the API? Because I've done this second one and I was like super stoked to find out that like I'm like, oh, I have these outcome tokens just sitting in my wallet, which is pretty crazy. But yeah, I was wondering if you knew about that, because I haven't actually tried the first one yet.
Right, right. Yeah, of course. We explored this network of proxy wallets through and through. Yes, we needed to ship the product. So for your wallet, there's always tokens in there, right? So no matter if you use an app, if you use a website. I mean, there isn't really an app for Polymarket right now. I think it's just like the one they have is just a placeholder. For Polymarket US, it's a different case though. I don't think Polymarket US positions will be on chain, but that's a separate story. For any position you hold on polymarket.com, there is a token. If you just use the same wallet and connect it to Gondor, we'll fetch your tokens and we'll be able to help you like take them out. Essentially, all you have to do is sign a transaction and then they're being transferred because it's all in your control, right? It might not be in your EOA to be accurate. It's on your proxy wallet, which Polymarket created for you. But then this proxy wallet is controlled by your EOA, so you can still sign a transaction and like transfer those out. Yeah, and then there's a little bit of a different story if you signed in with email or Google account. That's a bit annoying because you don't really have a wallet to connect from the first place, right? So as of right now, in order to use Gondor, you'll have to export your private key and then place it into Privy, which we provide you, and then Privy stores your private key. I mean, obviously, we never like have access to it and everything, but it's still a bad user experience. Unfortunately, there's no workaround for it at the moment. We spoke with Polymarket team and with a bunch of others. I think we're not the only ones encountering this problem, like of migrating users to different apps. And yeah, Polymarket team said that they might be shipping some better solution eventually, but at the moment, yeah, that's the only way. Uh, but overall, I'd say, yeah, especially if you're a crypto native or if you use wallets, your positions are quite transferable, so it should be quite convenient.
Yeah, I think that that's good. Yeah, it's funny because it's been a workaround. Like it's one of the benefits of having a decentralized application, which is why I'm interested in looking at Kelshi as they develop and how they're going to develop their crypto play. Because it'd be really cool if we could also hold the Kelshi tokenized positions as well, and then we can get some really cool stuff going. Some great, uh, some great arbitrage opportunities. Make it really easy to transfer these tokens between each other. The only thing is that and that's for kind of like connectivity of prediction markets, right? Just connecting them all together, kind of like how DeFi is right now. The only difference would be like the outcome resolutions, which would be the hardest part to navigate. But I think I'm interested to see where that goes. Is your team looking at so I know that you've received a grant from Polymarket. Congrats, by the way, on that too. But are
Thank you.
you looking to kind of expand into other prediction markets, or are you kind of right now it's Polymarket Eco and Polygon specifically, exclusively?
Right, right. Great question. So, yeah, first off, I think our like one liner is the DeFi layer for prediction markets, and it's very intentional. So we're not a borrowing protocol, and we're not a borrowing protocol for Polymarket. Right now, our product is a borrowing protocol for Polymarket, but then obviously we are going to be expanding to more markets and more primitives. And Kalshi is the top priority. I think it's quite clear that they're the only ones who are matching Polymarket in terms of volume and like everything else. Opinion Labs is obviously another one, close numbers wise, but I think it's questionable whether their volume is legit and everything. It could be a different conversation. But yeah, for Kalshi, we are very interested. I actually spoke with Tarek about an integration back in summer, but they haven't had their like on-chain layer ready yet. So the reason we went with Polymarket first is just because it's already there, right? And then for Kalshi, I don't think we'll be able to provide our services to people who use Kalshi.com. It's only to the ones who use those front ends on top. So like Jupiter right now takes care of the distribution for Kalshi tokens, and it doesn't mean that now that Kalshi is on chain, it's not that all the Kalshi volume and all the Kalshi deposits come on chain. It's only the fraction which people decide to trade on chain that's going to be our like total addressable market, right? So yeah, we definitely look in it, and I think we'll start working on an integration like early next year. But as of right now, yeah, we're in Polymarket and Polygon, and yeah, everything else.
Is it all set up for Kelshi already? I haven't been following, but like, are they on chain? Do they have tokenized event contract, like tokenized events? Is that all kind of
Yes.
okay?
Yes, so I might be slightly incorrect here, but as far as I know, first off, yeah, they're on chain. They should be live on Solana with Jupiter as their distribution partner, essentially. Then the way how it works is that Jupiter buys a Kalshi contract off chain and then mints a token which represents that off chain, on chain, and then you can trade that Jupiter token within Solana ecosystem, right? So it's sort of like RWAs, and I think it also makes it a little bit difficult for us because if you want to liquidate a position, you have to call Jupiter. Jupiter calls Kalshi. Kalshi sells it off chain. All of that adds latency to our liquidations,
Right.
which is no good. But it should work at the moment. And I think if you go to Jupiter, you should be able to trade on their front end. Kalshi doesn't have like an on-chain front end themselves quite yet, and I'm not even sure if they're gonna plan to do that. They're now relying on like other distributors, like you've seen they integrated with Coinbase. And I think the Coinbase positions should be on chain, but they aren't going to offer it on Kalshi.com.
Interesting, interesting. Yeah, I didn't know that. But that's really cool to know that you can already kind of use Kelshi tokenized positions. So you have deep history with Polymarket, correct? So like I was looking into a little bit of your Twitter. I know that there's some familiarity. I don't know if you or someone from the team maybe worked in Polymarket in the past, but I'm curious to know, I think you have some big players on your team. So I'm curious to know like what the team looks like and kind of like what your history with Polymarket is. I think you got into a little bit at the beginning. So
Right. Yeah, 100%. So yeah, I think I kind of touched on it myself. Yeah, just been trading, looking into it. I actually was also deep in the community, I think, which is a very specific one. It's sort of like, I guess, rationalists or those people who are thinking of prediction markets in more like theoretical way, right? So Robin Hanson, the guy who came up with the futarchy concept and the AMM, like as well as one of the core crypto primitives. So yeah, I went to Manifest back in 2023. That was like a conference about prediction markets where all of those guys were just hanging around. Like I think Robin Hanson did a talk on like why it matters, and some early Polymarket employees were there too, and Kalshi guys, and even Shane was probably there, but I didn't know who the guy is at that time. Yeah, so I kind of like had this social circle around me talking about prediction markets. I also went to a cool event in 2024 or so, I think. So Manifold, this Play Money Prediction Market, was hosting a dating show, which I don't remember how it was called, but the concept was that there was a girl on stage, and then there were like maybe 10 guys, and they were competing in different contests in order to go on a date with a girl. But the tricky part is that there's a market on all of that, and all the like audience have access to it, so they're betting with this like fake money in order to then like understand who's gonna be the winner. And yeah, I think I've made like 10,000 mana on that one, which is quite a lot of mana on Manifold. Yeah, so that was a cool experience, and I think we're yet to see more of those engagements for prediction markets with something going on in real life. But I also think it's only possible if you use like play money, right? If that was for real cash, people would be like mad, and lots of conspiracies on like why one person won and not the other. But yeah, with fake money, it was fun. Yeah, so that were a few other things. Let me see. Yeah, as for Polymarket team, so Mike, an engineer from Polymarket, was pretty much the first guy I reached out to when I started conceptualizing all of that. He's not working, he's at Polymarket, he's a smart contract engineer in there, but he built Polyland. So Polyland is a P2P contract which Polymarket like open source back in the day, they were also playing with this idea, and they were like, okay, so that's a cool implementation of it. So they basically just did like, yeah, P2P loans, not even wrapped in anything like, I guess, UI or front end specific. It's just a contract on chain, and they're like, okay, whoever wants to continue in that direction, feel free to. And that article hit like maybe, I don't know, 10 likes, 100 views, something like that. It was just somewhere in the depths of the internet. But when I was researching, like, if anyone has done anything in that space before, I found out of like Polyland, and then yeah, Mike was the first point of contact, and then there were also a bunch of other engineers we were talking to at Polymarket, and I think for them it's also important if they end up like thinking of Polymarket as this like liquidity or like launchpad layer, it's important for them to consider how easy it is to integrate with them, right? Because initially Polymarket, I don't think it was designed for the stuff we're doing, right? So there isn't like a proper way how to take those tokens out or how to place orders atomically, all of that. It just happened to be so, but it's possible. But now I think they should be having more of it in mind. And yeah, they've been helping us with the integrations quite significantly as well.
And are you guys P2P? Is like how, like if you want to kind of get into, for people who don't know, how the lending works, how the lending kind of model plays out a little bit.
Sure, sure. So TLDR, we're built on top of Morpho. Morpho is pretty much the biggest lending protocol, which allows you to create pools permissionlessly. Let's say if you think of Aave, in order to list a new asset on there, you'll have to get a governance approval. So for us, for every market on Polymarket, we'd have to go through the governance process, which is ridiculous, and nobody's going to allow that. For Morpho, you can just like create instances of those contracts, which gives us some infrastructure which has been audited and like battle tested by a lot of capital. Like Morpho has, I don't know, 3 billion, maybe like 5 billion TVL right now. And then we can mint those for like specific instances for every topic, right? So in the very core primitive, we have those pools which have two tokens. One token is USDC, or to be accurate, USDC.E, because that's what Polymarket uses under the hood, actually. I think USDC.E is like a legacy token left from back in the day from when Polygon didn't have like a native USDC token, so it's a bridged one. Very weird, like crypto style UX, but we abstract that all away. So one token is USDC. The other token is an outcome token, right? So maybe it's like, say, yes on JD Vance becoming the US president in 2028. And in order for you to borrow USDC, you have to supply this yes JD Vance token, and then we let you get some USDC out of the pool, which we transfer to your Polymarket account instantly. So you don't even have to like redeposit it back into Polymarket. You just like have your cash balance increase there. And then so where liquidity comes from, right? So where those USDC appear, we have funds. So funds are essentially Morpho vaults. These are collections of different markets. So like, let's say maybe there's yes on JD Vance, but then there's also no on Taylor Swift becoming top musician. Then there's also, I don't know, yes on Weather in San Francisco being a certain degree. And lenders allocate their capital to the vaults, to those funds. And then these funds, which are being managed by us, they automatically redistribute it across the pools, which is how it currently works. This is a pretty, I guess, rough version of what we want to do. So Morpho obviously has its own constraints. And because of that, we're not able to fully customize it. Otherwise, we'd have to build our own protocol from scratch, which we might do eventually, because I think at the end of the day, there are some very custom features we need for those prediction market tokens, which are not available in like traditional protocols. But as of right now, given that they're on Morpho, we're a bit constrained by that. And so with Morpho V2, the next version of Morpho, which comes out I think early next year, we'll be able to do P2P loans, which would be first off, peer-to-peer rather than peer-to-pool. So no more of this weird like liquidity rebalancing. Then it's also going to be fixed interest rate. Right now, the interest rates are fluctuating based on supply and demand, which is interesting for us because we can see how price sensitive the users are. but eventually the users would probably want something more stable. And then after that, those loans are also multi-collateral, which is very interesting for us. So instead of borrowing against a single token, you will now be able to borrow against multiple tokens at once. So let's say you have like your whole poly market portfolio, maybe like 10 or 15 different positions. You bundle it all and you borrow against all of those tokens, which helps both lender and the borrower. So for the borrower, your collateral is now less volatile, right? So if a single token goes down, you might still not get liquidated, and you'd prefer not to be liquidated because it's always not something you'd want to do. But now, like your volatility is a little bit minimized because of the diversification. And then for the lender, you're also more protected because now it's not just a binary outcome. You're not exposed to those directional spikes where market resolves in an instant, right? Instead, you have this bundle where you can liquidate the remaining positions if one goes to zero. So yeah, that's the plan. So current implementation, peer-to-pool, fluctuating interest rates, rebalancing liquidity across funds. Next version, peer-to-peer, which like funds, both funds will essentially be taking the counterparty of that, and then multi-token collaterals, fixed interest rates, something like that.
Yeah, yeah, it's very interesting, and it sounds like because of the kind of limitations of Polymarket, you're kind of breaking into this new area. So it's not as straightforward as like just creating like a P2P contract with like an ETH contract with like a liquidation threshold or something like that. It sounds like there's like a lot more that you have to kind of put into this. And so the funds, and you have three funds that are kind of managed by you. I think you said you had like three operating
Yeah,
funds.
that's right.
I'm curious, like, what is the difference between those three funds? Like, do they invest in different markets? Is it like like do you categorize it like that? And can you currently, and I guess tying into that question, can you currently kind of trade on any poly market, or would these funds be operational for any poly market, or are they right now specifically targeted towards certain poly markets?
Right. Yes. So first off, we do indeed have three funds: conservative, moderate, and growth fund.
I
Each yeah, each allocates depending on the risk profile. For conservative one, we have pretty much both bonds I was talking about, predetermined markets mostly. For moderate ones, it's usually like price related markets or something which is quite volatile but also liquid. And then for those, for the growth fund, the riskiest one, we usually have some, I guess, more exotic or more prediction market style markets. So like maybe who's going to be the winner of the next election. Not necessarily the US one, but I think right now we have, let me just have a look. So we have a few elections listed. We have Brazilian election, we have Hungarian election. Those type of markets go into the growth fund, and so each fund charged different APR. So our conservative fund charged the least, and then our APR growth fund charges the most because of the risk profiles of those markets. And then not all the markets can be supported. It's only the ones which we're whitelisting at the moment. Then eventually, I think we'll have some thresholds. Essentially, if liquidity in the order books has been more than X for Y period of time, right? Or if the volatility has been less than X for Y period of time, stuff like that. So yeah, that's the end game. But for now, we're whitelisting it ourselves essentially.
So in the future, you will or you won't be kind of allowing people to create their own funds. Is that kind of something down the road?
Yeah, I think at the end of the day, it will be interesting to see because as we integrate more markets as well, right? More platforms, I mean, so Kalshi, maybe then it's also Limitless or Myriad. There's going to be so many markets, we will not be able to take care of all of them. And if there are more platforms emerging, then it would be even more difficult. So yeah, I think eventually it would make sense for people to create their own vaults and then manage them like as they wish, and maybe even like be their own like GTM or like marketers, essentially attracting capital to those vaults, right? And maybe we as a team can help like them bootstrap something. So yeah, that would be possible, but it's not a short term or even medium term plan. I'd say it's still very difficult to manage those funds, and obviously, even if it's externally managed. If the fund collapses, it would be on us, right? So we want to be very careful with that stuff.
Yeah, yeah, and it would probably involve like a pretty rigorous whitelisting process too. Like you'd have to talk to the people like managing the funds. I think there have been a couple platforms that have been launched on Solana and Base that have done like fund management type of things. We're actually working on a trading fund management platform, and I think at the end of the day, like it depends on the way it's designed. But there, you'd probably have to do like a whitelisting process. But I think that the way that you're categorizing it is really interesting because it's categorized in terms of risk outcome, which is I think that in itself is a new concept for kind of funds slash DAO management, and at least in the DeFi world. But yeah, so that's very interesting. So let me play this video because this is a pretty cool video. I was super impressed by it. I don't know who you got to design this, but this is yeah, let me just play this for people who haven't seen it.
Of course.
Prediction markets are becoming a new institutional asset class. Wall Street is already on Polymarket, while HFT quants are spinning up prop shops. But for these traders, capital efficiency is everything. You can't hit TradFi level returns with funds locked for months. That's why we built Gondor, a protocol for borrowing against your Polymarket positions. Your shares become collateral, unlocking more liquidity or leverage. It's simple. Connect the same wallet you use on Polymarket. Deposit shares as collateral. Get a USDC loan straight to your Polymarket account. And for the crazy ones, trade Polymarket on Gondor with up to 2 times leverage. Under the hood, we borrow and loop USDC for you to create a margin position. We're a lean team, building fast out of New York City, and we're excited to open up the Gondor beta. It's live now, with $150,000 ready to be borrowed and over 100 supported markets. Apply and get in within 48 hours.
That's a great video, man. I mean, like right from the graphics look good. I mean, like just the fact that it's like you're positioning yourself as kind of like a New York company and finance, which and kind of like the new kind of we're kind of like insurgent to tradfi. We're in the capital of finance, so I just think everything about that video is great. One of the things I would use this product right off the bat, and what I would use it for is the 2x leverage. That alone would get me to use the product. So I'm curious about that, and I think you touched on a little bit. You talked about a little bit, but how do you make the leverage happen? Is that just by the nature of you kind of managing these funds through Morpho, which is, I think Morpho is like a perps market as one of their main products, correct? But I'm just curious if you want to kind of talk about that more, because like right now there's a couple people working on leverage. I don't think anyone has really done it super well. That looks legit. That 2x leverage would get me to use this product right away. So
Thank you. Thanks so much. Yeah, first off, glad you enjoyed the branding. We put a lot of effort into that. I think myself alone, I spent like, I don't know, 12 to 20 hours on that video. And member was obviously like a team as well. And then for leverage, we indeed have it up to 2x at the moment. And then we're planning to expand to 4 or 5x once we have cross margining. I think with isolated loans, it's very difficult to provide anything higher because it's just risky. It's risky both for you as a borrower and for us as a lender. So the way how it works is very simple. It's just looping, right? So you borrow against your position, then you use that capital you borrowed to buy more of the same position. Then you deposit it back as collateral. Then you loop it again, and that's like you can do so until you run out of collateral. That already happens on pretty much any like classic lending protocol. So lots of Avis volume, let's say, is generated by looping and creating those margin positions. For us, I guess a unique experience we provide is that you don't have to do the looping yourself. You can just go to the leverage page on Gondor and we loop it for you. So we have our own scripts which are just running on the background. And if you decide, okay, I want to turn my 100 JD Vance shares into 100 leveraged JD Vance shares. We're going to borrow, we're going to buy, we're going to loop, and we're going to continue doing so until you get to the leverage target you asked for, right? And then the coolest part is that you can turn your existing shares into leveraged ones. You don't even have to invest any more capital, right? So whatever your current portfolio on Polymarket is, you can just make it 2x, and then like in the future 3x, 4x, wherever we get. And then obviously not everybody has those shares by default, so you can also leverage with USDC, and that's pretty much as simple as it is with leveraging shares. But there's one extra step: we buy you the shares first, right? And then we just do the same thing. So yeah, I think that's how it works in the most simple like explanation.
Yeah, that's really cool. I mean, again, like anything that would give me more exposure to trade, it's because like these markets, prediction markets are interesting because like first of all, there's like limited upside, right? It's not like the stock market where it's like it's like theoretically things can go up forever. So it's like anything that'll give you a little bit more leverage, anything that can give you a little more yield that you could earn off these positions is going to be super valuable. And I know that the market, this it's not exactly the same as the stock market, but if you were to take the current concept behind Gondor, the lending, the 2x leverage that you can get from looping, what is a TradFi product right now that exists that you could relate this to give people an easy idea of kind of like the vision going forward?
In a sense of what would be the TradFi analogy of Gondor?
Exactly. What's kind of like the TradFi analogy, so we could get a sense of like how big this market is going to be?
Sure. Just margin trading. I think as simple as that. So any exchange you go to and trade your stocks with margin works in a pretty similar fashion. So that looping with borrowing we do is the way how any margin position is created. The only thing is that there's no looping in there because it's usually centralized. So there's an exchange which underwrites your loan by default, and then you just trade, right? But for us, the coolest part about it is even your leverage position, it remains decentralized in a sense. What happened is instead of having 100 shares deposited into Gondor, you now have 200 shares because we've bought you more, right? And in order to unlock those shares, you have to repay the loan, which we are doing by just like selling those shares and keeping a part of it, right? So in order for you to think of it, I guess, in more easier terms, you have 100 shares, right? You are able to get the profits out of those 100 shares. And then now you also have a liability to repay debt for another 100 shares, right? Because we've bought you 100 more. But that's a fixed number, right? So maybe we've spent like $50 on that. So now if this other 100 shares appreciated and now they're worth $75, we can sell those 100 shares. We can repay the $50 because the debt hasn't increased. It's still the same 50 plus maybe some interest on top. And you keep the 25%. So basically, now you have appreciation from the shares we've bought for you also in your pocket, as well as appreciation of the initial shares. So I guess that's how it works on the on-chain level. And what's cool about it is, that it's still non-custodial. We're not taking custody of your leverage position, as well as we're not taking custody of your borrowing position, whatever you do. But like the closest analogy, because there's no such thing as non-custodial in TradFi, would be margin trading. Yeah, people open their positions, they borrow against these positions to have more margin to trade. Then they get liquidated if they're wrong, or they get extra payout if they're right. And what we're doing with Morpho V2, what I've mentioned, is essentially cross-margining. So right now, what you can think of Gondor is it's isolated pools, right? Similar to how you do isolated margin trading. We want it to be cross-margin because those binary shares, they're very much, they're binary by nature, right? So they go to $1 or 0. It's very difficult to use them as collateral. Whenever you use something as collateral, you want the lender not to be exposed to the directional risk, right? That's the goal. If lender's not exposed, then they can safely lend. But with those binary shares, it's difficult to get so because they can always go to zero. There's no like substance behind them. So if you bundle those shares, if you create this cross margin position, then it could actually be the substance which would emerge out of that, right? Because shares, assuming shares are not correlated, and we also have to measure it on our hand. Obviously, we have to make sure that the portfolio of shares you provide us is not about the same markets essentially, because in this case, there's no correlation happening. They all can go in the same direction, right? So assuming it's correlated, you have a bit more safety in order to underwrite those. And yeah, so that's cross margining, and that's the same which happens when you open Kraken and start margin trading or stuff like that.
Yeah, I see this. Yeah, I mean, I think it's going to be a huge market. I think that this protocol is going to be a very big. I think it's tackling a space that is just going to be huge. If you consider the size of prediction markets and how big that we think that they're going to be, markets for everything basically. You can easily kind of put it together that this product or types of products like this are going to be very large. My question is so kind of like the interface, and I'm excited. I'm curious if you have I know we saw a little bit of the platform in the video. I'm curious if you're going to release a demo soon or kind of like a product, but from my a product demo. But from my view, it kind of seems like the experience is going to be like a trading terminal kind of. It's going to look like a trading terminal, just with leverage, and then maybe with some options to to lend out your your event contracts. So so is that kind of like the feel, the vibe of the platform? Would you say kind of similar to that?
Right. Yeah, 100%. So I guess first off, no demo for today, or I guess the next couple of weeks, because we are very intentional with what we're disclosing. I think we've been quiet on Twitter for the past 3 months or so since we raised the angel round, and that was also on purpose. I think, there's been quite a few people who are trying to build our copycats, so we're cautious about that. I think I posted a story a while back when we were interviewing one of the guys for our quant trading position. We're currently hiring quants to do the risk management. And so that guy ended up not continuing with the process, and instead he went on and started raising for Gondor's copycat, which is crazy. It's a funny market we're in right now. But I can tell you a bit more for sure, and I can also let you in the beta itself, and you can try it out, just play around with it and also see the functionality. So yeah. 100%. So as for, I guess, the web app itself, it's essentially 3 different products. So leverage, borrowing, and lending. It's completely separated from one another, and they have a little bit of different user experiences. So for borrowing, we started by getting inspired from typical DeFi protocols that work, right? So say Morpho itself has a really, I'd say, a solid user experience. It could be improved, but it's a good foundation. So that's what we started with, and then we're adding a lot of features on top, which are essentially abstracting away this complexity of crypto. So our goal eventually is not to be a DeFi protocol, because most polymarket traders are not necessarily DeFi natives. And then for lending, it's kind of the same. I'd say it's a little bit more information focused. So we're trying to give you better understanding what kind of lending product you're getting into. Lending doesn't accept new deposits, by the way, right now. So we've supplied the liquidity ourselves, and we're only going to be opening lending in a little bit once we are more, settled with the way how we do risk management and everything else. Because we obviously don't want people to lose capital. That's probably the biggest objective here. But for lenders, yes, our interface is basically, because you only have 3 options, right? As a lender, all you got to do is you got to decide whether it's conservative, moderate, or growth fund, and then how much you're lending. That's it in terms of the user experience. But you also have to put a lot of thought into that, depending on what's your risk profile. You might want to research where the yield comes from and all of that. So we double down on it, and we provide you more visuals, understanding, and everything, just so you could get into as much details as you can without having to look it up on chain, right? Because eventually you can technically get through everything on chain because it's eventually transparent, but we don't want users to to be bothered with that, right? And then so leverage, that's closer to a trading terminal, I'd say. It's kind of a mix of typical polar market interface and the trading terminal. We've started with the polar market interface because it's the most familiar one to users. I don't think polar market interface is like the greatest way of trading on prediction markets. Like there's probably lots of UI UX improvements you could do to it. But the thing is that people are used to it, right? So in order for you to get people on board, you have to first start from something familiar, and then you can like iterate on top. But then eventually, yeah, I think it will come down to a trading terminal. And given that more and more of TradFi people are showing up in the space, they have very specific interfaces they're used to. So we might eventually like continue in that direction.
Cool, cool. Yeah. I kind of assumed that it was going to go in that direction because, with all the products you're building, it seems like it would tie in really well to that sort of an interface. So I have a couple more questions. Then I got a little bit of a vibe check question on the, on the prediction market space, like kind of like a general, where do you think things are going? But I guess my last question about what you're working on is, well, I have a couple, but so we know a lot about, so I can see the clear benefit for the people who are kind of like borrowing, or, because they need kind of, they have these positions, they're trying to make extra money on these positions, trying to get leverage. Will there be a reward for lenders? Are you thinking about building in certain incentive structures, additional incentive structures for people who are lending and providing the capital?
Right. Yeah, 100%. And by incentives, I assume you mean like points or XP programs, stuff like that, right? Yeah, so I'm a little bit on the contrarian spectrum right here, I guess. I try not to build this product in a crypto way where like you give away, I don't know, points or tokens, they drop everything. Ideally, if we can make it, we should make it so that there's no other incentives required, so that it's just beneficial for the user to use the end product. And then up on top of that, you could of course provide the incentives, but it shouldn't be the major, I guess, part which generates you the users, right? Because then once you run out of incentives, what happens? That happens that, right? We, I think we saw that with lots of perp dexes trying to take over Hyperliquid, and yeah, people were very excited about them until DG happens, and then token goes down, and that's about it, right? Same probably happened with like Pump.fun and everything, right? They also had a lot of competitors who were only active like during that airdrop stage. And yeah, we want to be a bit more sustainable than that. But yeah, I guess TLDR right now for lenders will probably be gradually opening it up in like separate steps. And like third step is just for us to provide the capital. Second step would be to partner with liquidity providers, and I think that would be rather non-retail providers. So there are obviously lots of different DeFi funds which are allocating cross protocols to generate yield, which is also not, I guess, correlated with the success of a specific protocol, right? So those type of firms, they usually just look to diversify the portfolios, and it's not necessarily that they need the yield to be the highest. It's rather that they need like less exposure to any specific part of their investment, right? So those types of DeFi funds would be the next step for us. And then eventually it's of course going to be the retail users or maybe anyone who wants to lend. But yeah, I don't think we're going to be doing any points or like XP anytime soon. We might have like the interest rates boosted potentially, but that would be like in USDC form, essentially, just to incentivize people to have like a good term for the loan itself.
Yeah, I mean, I think that is a good strategy, actually, when I'm thinking about it. Like, and you would really only need those XP points if you were going like direct to like individual retail, lenders. I think if you're going like a B2B route where you're kind of like getting the liquidity from DeFi funds, which I think is a smart move, to be honest with you. I think that that's how you want to kind of build this thing initially. I don't think, and you can work out deals individually with them if you need to. I think that that's a better strategy than trying to go the degenerate, you know, mine points, mine this, mine that. I think I do sense that we're kind of moving away from that, and that prediction markets in general seem to be moving into a trend where it's like, okay, well, this is like a new asset class other than crypto. We don't have to have the same crazy behavior of mining points and mining yield and all this other stuff. So I think that's a good strategy. So I have to ask this question, and I know you're probably not going to like it, but uh, token, is that going to happen? Kind of piggybacking on what I was just saying.
Of course, of course. So first off, I guess just to address your comments a little bit
Sure.
earlier, I think with DeFi funds, it's also not so straightforward as it seems to be. Like usually those deals involve token warrants and stuff like that, which is essentially very similar to you like promising points or like tokens or XP to the lenders. But we'll at least there you can negotiate, right? And it's much more controlled in a sense, and also uh, there is not so much of exposure for like the retail funds, right? We retail, I think, is the kind of uh, people you should be the most careful with, right? Because those DeFi funds, they eventually understand what risks they're taking into. They're doing the due diligence and everything. If it's just open for anybody to deploy the capital, then yeah, like some people do not care, right? Which is not good for them. And then, yeah, as for the token, it is not planned, at least as for now. I think right now the objective is to get to the PMF, and PMF meaning like being useful to the traders. I think that's the biggest question because lenders, it's not so difficult to find them. Like cash is cash everywhere, right? You can raise from all kind of different places. I couldn't imagine how many there are. But for demand for borrowers, it's a very specific, narrow category we're targeting, right? I mean, on Poly Market, if you just filter like the users out there, it's the top like 1% which generates most of the activity, right? So it's very specific people. It's not just like an abstract like group of Poly Market traders, right? It's like every whale counts essentially, and yeah, that's who we gotta focus on right now. And yeah, I think until we get them, no plans for the token. Might change. You never know what's going to happen in the future, but that's where we stand right now.
Cool, cool. Okay, so my last question, I think we can wrap it up pretty soon because I know you got a hard stop soon. We're a little early, but I think we got some really good stuff. I just want to kind of get your general take on where things are going in 2026, what you see. I might have one more question for you after this, but yeah, what's your kind of a general feeling of 2026? Are we going into a prediction market bull run? What do how do you think things are going to play out over the next year?
Right, right. Yeah, so there are two parts to that. There's an obvious part, and then I think there's what we're betting on with Gondor. So the obvious part, I think, is sports betting, which is a bit unfortunate for me to see, honestly. Prediction markets clearly found the PMF there. It's by like technically it's a loophole which lets you provide the sports betting products without calling it a sports betting product, right? And so now we see it with um, Kalshi rolling out combos, which are just paralyzed. We see it with Poly Market US being mainly focused on sports rather than other markets. And yeah, I think generally sports betting will be huge. And eventually, the sports betting companies themselves, we already see them kind of like leaning towards that prediction market direction because it's very convenient when you can just call a product prediction market and then like avoid being regulated by so many different structures. Plus, you also can like attract market makers and everything. Like it's just a different like nature, different model. And I do think that prediction markets for sports are a better product than sports books for sure. better odds, better liquidity. Prices are more fair, right? But it's still sports betting, which I'm not a fan of. That's that, but it will be big. And eventually, I think if you've seen any demo, like whether it's Robinhood, whether it's Coinbase, whether it's any other app, you'd see them like talking about prediction markets when they show you the interface, and the first thing you see is like some game between the two different teams, right? Yeah, we live in society. That's that. But I think another thing we are bullish on with Gondor specifically is institutions. So we see lots of different traditional firms being interested in prediction markets. Like Susquehanna's been market making on Kalshi for quite a while. As far as I've heard, Jump Trading also started doing so, either on Kalshi or on Polymarket. It's all rumors. Don't have much info there. But then Falcon X started looking into prediction markets. And obviously, the reason why Polymarket raised to build from New York Stock Exchange is because they want to be on Wall Street, right? And that's what our video was also about. So we're betting on this institutionalization of prediction markets and getting more, I guess, professional players in the field, especially on markets which are hedgeable or correlated. So like pricing markets, stock markets, I mean, and I don't mean stock market as like the typical one, but rather like markets dedicated to stocks on Polymarket, right? So those types of markets would probably grow because of those institutions, and there are different strategies you can build around them, combining them with real world assets like stocks themselves, right? And that's something very interesting for us specifically, and that's, I think, the kind of long-term target audience Gondor is building
Cool,
for.
cool. So real quick, in like the next, 5 minutes, what if there were a product that, right now you're building lending, but if you could build another product, what other product in prediction markets do you think is really interesting to look at? That's not kind of what you're currently building.
Right, right. Yeah, so I think fund management is a very interesting niche. There's already a Polyfund, who you might have heard of. They're basically letting you spin up a fund and then raise external capital for it from like other traders or just people in general. And then you can use this fund only for trading on Polymarket, and you split the profits. That's pretty cool, right? Where I guess lots of those traders who are hustling their way up, right? So like we have Moses, who turned $1 into
Yeah.
100K, which is a crazy return, right? And many people want exposure to that, and many traders are willing to manage others' funds. So that's a pretty cool product. But I think that for borrowing, there's a little bit of a bigger niche right now, and in general, that's the easiest product to take to the market. This fund management still requires trust. And although it's difficult to manipulate the funds if they're only constrained within Polymarket, it's still possible on a liquid market, especially. So yeah, that's another interesting product we're looking into. And then apart from that, I think insurance could be a cool one, but it's still yet to be seen where the PMF is. Probably you have to sell to different companies rather than individuals. So maybe like companies spinning up specific markets on something they're concerned about. So like say whether there's going to be a hurricane in a specific area, but that's still like yet to be discovered PMF wise. But yeah, I guess that's the overall direction we're looking into right now with those other products.
It's really interesting. We were actually thinking about doing the insurance stuff when we first launched, but we kind of came to the same conclusion that you came to, which was it's new, it's really new, and it's really novel, and there's no kind of backlogged history for a product market fit on that. I can see the benefit, right? Because of catastrophic loss, I could see how some traders would definitely want, or market makers would want to be exposed to some sort of like Lloyd's, I don't know, like some sort of like insurance for insurers almost. But what's it called? Cat bond insurance. But yeah, it's very new. So I definitely agree with you there. Well, thanks again, man, for coming on. I just want to get your name. So it's Arseni.
Yep, Arsene is right.
Thanks for coming on, man. It was great talking to you. Really loved having you on the show and just getting more into this product. It's a fascinating product, and I'm excited for when you guys go public. And I think you said you're going to go public in like uh, early January, right, or mid January or something like that.
Will really depend on the beta, but I think realistically it's gonna be sometime next year, but probably like not the earliest. So we're looking either at spring or summer, and then it's also we have to decide how we're going, like how we're opening it up specifically. So it could be that we're launching like at once, or we just scale the liquidity up gradually, right? So that even if it is publicly available, we're on the limited amount deployed in there in terms of lenders, right? So yeah, we'll see, and more updates to come. So thanks so much for inviting me over. Love the show. I think what you've been doing is great, and excited to see what you'll come up with Polyfactual as well. So yeah, thanks for inviting, and yeah, it was great chatting.
Thanks, man. Had a good one.
All right, have a good one, then.